Well, good afternoon. Welcome into Market Talk for this Monday, February 14th. Happy Valentine's Day. Thanks so much for joining us and making us part of your day today. Find us online. MarketTalkAg.com is our home on the web, MarketTalkAg.com. You can find all of our social media links there. Give us a follow, all of our streaming sources as well, whether you listen to the show on Spotify, Apple Podcasts, SoundCloud, many other ways to listen to the show, watch the YouTube videos as well. It's all online, markettalkag.com, along with the latest news of agriculture. I'm your host, Jesse Allen. Thanks for joining us. Plenty to discuss here as we start this week in the market trade. We see grain markets mostly lower on Monday, with livestock futures trading higher. We'll be talking about that a little bit, but also just really taking a broader look at the markets and where they stand currently. And here to help us do just that, our good friend David Widmar with Agricultural Economic Insights, AEI, joining us here. David, it's great to have you back on the show, sir. How are you?
Great to join you, Jesse. I'm doing well. Thanks for having me back.
I appreciate the time, David. And let's jump right into this. Heading into the weekend on Friday, we saw the grain markets move higher. A lot of it was the geopolitical tensions with Russia, Ukraine. And now we come in here to start the week and we took a little bit of profit. But I want to talk overall because it seems that geopolitical concerns, that is one of the big drivers in these markets right now. And I just want your perspective on what you're seeing and what all of this noise around geopolitical concerns worldwide is kind of doing to our grain markets and kind of feeding into them right now. Not to mention, last week we had a WASD report that we seemingly kind of just shook off with all these other outside factors. So, talk to me a little bit about what you're seeing geopolitically and how it's factoring into the grain markets.
The geopolitical situation sort of took a pause during the pandemic, and we kind of alluded to this a year ago in some of our writings. We anticipated this to ramp back up as global economies and the political environment emerged from that. And you never know where this is going to pop up, and it apparently has popped up in this Russian-Ukraine situation. That's where a lot of attention is at the moment. Of course, this summer we had the Afghan situation, so we've seen a lot of, I guess, uh, uncertainty and change going on in this front. With respect to Russia and Ukraine, um, you know, I think one of the biggest challenges here is that it's not exactly clear how it's going to resolve itself. I think one way to think about this is even if you knew whether or not Russia was going to invade, um, and what exactly that means, you probably wouldn't be able to make a position in a market, in the stock market, in a foreign exchange market, in a grain market, and actually be able to guarantee a specific outcome. And I think one of the challenges there is um, the economic sanctions that are being proposed. From our feel, that seems to be the biggest wild card. Yes, there could be disruptions in global production, global availability of U.S. grains, and who's available to trade and who's not available to trade. I think that is sort of a given. It's level one. It's something everyone's thinking about. I think the bigger implications that could take a much longer time to figure out and resolve is how Russia will interface with the global economy once these sanctions start to roll out.
Well, on top of that, one of the other factors here is, and this is all going to lead into our discussion about the markets and acreage and et cetera going into the spring. South American weather. That's the other big storyline that we seemingly are following along with. And we've gotten a lot of private estimates have really lowered that Brazilian soybean production number. Combines really haven't rolled yet. They're starting to this week in some of those drought-stricken areas. So, I mean, when you look at the South American weather picture and how that relates to global supply and some of the worries we see in South America and how that's impacting the market. What's the latest you're seeing and hearing about that, David?
Well, we did a deep dive on the AEI premium side of the site and we looked at global stocks. And it's easy to get caught up in US production from WASI report from month to month, but we lose picture. Global stocks for corn, soybeans, and wheat have all tightened over the last few years, even this year. While the US inventories have rebounded, global stocks remain pretty tight. Now, how tight are they? It really depends on how you frame up China. Do you include the stocks that China has? Because they hold a majority of corn and wheat global ending stocks. If you include them, it might not be a perfect representation of reality because China's likely not going to export those. And so we got to think about how much is available for global trade. And it's a much tighter situation if you remove China. In fact, it's at some of the tightest levels we've seen in the last 20 years. And then we back up even farther. If we look at the stocks across all 13 primary crops, we have a very tight global stock situation. So I think when you start combining these supply production concerns in South America, the geopolitical concerns in Eastern Europe and with Ukraine and Russia, all of this sort of leaves people concerned and leaves people looking for this risk premium. And I think this is where the market's been taking us the last few months.
Well, and talking about that risk premium, you throw on top of that inflation, and yeah, I mean, we're seeing prices move higher. We're seeing prices move into territory we haven't seen in a while. I mean, looking across corn, soybeans, and wheat, and I know it ebbs and flows with each day with the computer algorithms, trading, and the volatility, but overall, I mean, we're getting high prices, and it's something about we've heard the adage high prices cure high prices. So, I mean, talk about this market a little bit and just when you combine all these factors together, what we are seeing overall and where do you think we're going?
Well, yeah, that's a great setup. That's a great question. I think all the things that you said are very, very true. One of the things that we have as a setup going into 2022 is there's a lot of demand stories out there. In fact, there's a pretty strong demand situation emerging for U.S. agriculture, global agriculture, primarily uh, the oil seeds and biodiesel, biojet fuel, renewable diesel. That's been a huge story over the last 16 months. The other story that's unfolded over the last 18 months or so is China's been buying corn. And so when you combine these two facts with low stocks, there's a lot of enthusiasm. So we saw the profitability of 2021, and we see the rising cost structure. Some of that's because of the strong profitability in agriculture. Some of that's because of the broader economy challenges. Some of that's because of supply chain issues of getting herbicide and fertilizer. But we have a rising cost structure. And so this is frustrating for producers because we have, 550 corn in the budgets for 2022. Well, 550 corn isn't going to generate nearly as much profits as it did last year. But we got to step back and say, how profitable is this? And I think when we see across the sector, um, there are some pretty strong profits. Not as strong as 2021, but fairly strong compared to the last 10 years of history, probably the second strongest of the past 10 years. And so this is creating economic signals and incentives. And that you mentioned the secure for high prices is high prices. So we're seeing additional acreage coming into production. How much will come into the US in 2022? Well, we'll get our first glimpse of that at the March Perspective Planning Report. But globally, we've seen 2 years of expansion of acres. Both South America has been leading about more than half of all the expansion of acres has happened in South America. And then interestingly, the former Soviet Union is a big area of the world where we've been seeing additional acreage come online. So this combination of high commodity prices, rising cost structure, and then this expansion of global production. We call this the boom cycle in production agriculture. And unfortunately, we all kind of know that eventually we will oversupply or we will meet supplies and we'll see commodity prices adjust from there. We don't know how long or how significant those changes might be, but it's on the back of everyone's mind. It's adding a layer of stress here in 2022.
I think on top of all that, and to go along with that, David, adding a layer of stress is deciding what crop to put in the ground here in the US. I mean, that's another big piece of the pie here when we think about where prices are. And you mentioned, the cost structure, profitability. Is it going to be more profitable for me to plant, $15 soybeans versus 550 corn? Is it going to be more profitable for me to plant spring wheat or cotton or some of these other crops, depending on the region you are in here in the US? And I think just with all the supply chain challenges you mentioned, I know we heard on Monday Bayer announcing they might have problems delivering glyphosate on some contracts. I mean, there's just a lot of questions still unanswered here with just a matter of weeks away before we really start to ramp up spring planting here across the US, David.
Exactly. And I think a lot of times in agriculture, um, one producer's budget is going to look pretty consistent throughout a growing season, and it's going to look pretty consistent from the neighbors. But in a year like 2022, how economically attractive corn versus soybeans look depends on when you built your budgets or when you locked in your input prices. And so, producers who are still making decisions. Need to make sure they're updating their crop budgets and update their marketing plans given the latest information. Fertilizer expense in the Corn Belt has gone up about $80 an acre uh, from just the fall. So, and that's about 50 cents a bushel on a dollars per bushel basis. So you really have to understand how your neighbor might have a very different outlook on the corn versus soybean debate than you do, based on when you all priced in the fertilizer, what your expectations of fertilizer prices are throughout the rest of this year. But let's back up a little bit. I want to revisit this. It's easy to get frustrated about this rising cost structure, but in general, the outlook still looks favorable. We've been using the term cautiously optimistic. And one of the things that makes these demand stories, these demand booms, so interesting in the production ag business cycle is that all commodities are sort of at the table. They're looking to maintain or gain a little bit of acreage. And so it's not just corn that has a good price. Soybeans also have a good price. Wheat has a good price. Winter wheat already gained about 750,000 acres. That's the first bat for the acreage debate. Winter wheat already said corn and soybeans, you can't have any of our acres. In fact, we're going to take some of our acreage. And so that's going to already start to be a headwind for corn and soybean expansion. We'll see spring wheat. We'll see cotton. Cotton prices are very strong. They're going to be in the market looking for some acres too. But it expands even to the small acreage crops as well. And so we're going to see, I think, even in the hay crops, we'll probably see hay crops in there competing. So we're going to see a lot of competition for the acreage. That's a positive story for U.S. producers when there's profits and lots of commodity options. Uh, it's a good thing. I guess it's less painful to have too many choices than not enough choices. Which not enough choices is where we were just a couple years ago and going into the trade war. It's like, man, what crop should I plant? None of them look good. This year, it's what crop do I plant? They all have some appeal to them.
Well, David, as well, looking at the macro side of things and how that all plays in, and I alluded to this earlier, inflation and looking at everything kind of rolled into one. I mean, inflation, we're seeing it impact everything in our daily lives right now. We're seeing it impact the ag markets on the grain side, livestock. We're seeing livestock prices move higher as well, cattle and hogs. I mean, just there's a lot of things going on the macro side as well. Anything there stands out to you that we really need to keep an eye on here for the next 30 to 60 days?
Well, the first thing I think is important to do is to not get caught up in the narratives or the um, the availability bias around inflation. So it's easy for us to go to the store and see a price that's much higher than what it was a year ago and sort of focus on that. So inflation is true. It's the highest that we've seen in several decades, but it's nowhere near hyperinflation levels that we hear thrown around. It's nowhere near um, the challenges that we saw in the 1970s. So inflation causes pain in two ways. It's the magnitude and the duration. So the magnitude has creeped up, but we haven't seen the duration last that long. For context, we had an entire decade in the 1970s where inflation didn't get below 5%, the level that we're very concerned about today, and rightfully so. But during that decade, it also averaged over 7%. And so that's really painful. It wasn't necessarily the double digits that we saw twice in the 70s. It was the decade that it spent averaging more than 7%. The second thing I think it's important to keep an eye on are the interest rates. We've been getting asked the question a lot, what's going on with interest rates? And we think it's important to break that down into three components. The first one is, what's the probability of the Fed raising rates in the first 6 months of 2022? And what's the probability of the Fed significantly raising these short-term rates throughout the calendar year, say 150 basis points? And the third element here is, what's the probability of these longer-term rates, say the 10-year Treasury bills, increasing significantly in 2022, say going up 150 basis points? Now, if we take this sort of ambiguous topic of interest rates and we break them down to three components, producers can start to think about, what's the implications for my operation and which one am I really worried about? In a lot of cases, we're hyper focused on the Fed's next move, which is probably going to happen in March, and we lose sight of these longer term rates, which longer term rates have been going up over the last 12, 15 months. And the Fed hasn't moved those short term rates. So we got to keep an eye on those long term rates, especially as it pertains to agriculture and especially as it pertains to that inflation concern, because that's where all the action, that's where the crossroads for all those concerns line up.
Well, David, I know on AEI.ag and on the premium side of the website as well, you provide a lot of information for producers to make decisions about their specific operation and help them. Talk about some of the things that you guys have on the website as well right now that you haven't mentioned that could really help producers as they're making some decisions here this spring.
Well, encourage everyone to check out AEI Premium. It has 3 or 4 articles a week that we write dealing with farm management issues. It's a deep dive in the issues. It's not breaking news, but it's a breakdown of the news. But also in there is that Ag Forecast Network. And thinking about that interest rate conversation is we help producers really think about what are their expectations about interest rates, both short term and long term rates. And then they can benchmark themselves versus everyone else in the platform. So are their expectations significantly different than everyone else's? And that's a really valuable tool because it allows them to start to think, okay, if I'm way out here compared to everybody else, what am I missing? Or what decisions should I be making as a result of this? We have questions about interest rates, the March Perspective Planning Report, and all sorts of topics that you have to take a look and challenge your thinking a little bit with that.
Well, again, that website, aei.ag, is where you can find out more. David, any final thoughts you have for us, real quick, before we run out of time?
I wish everyone all the best of luck here in 2022. I think it's really a lot of potential, but it's stressful. And then we want to acknowledge that and we want to make sure that we don't get caught up in just sort of all of the angst, but we also figure out a way to move through those uncertainties and make some good, solid decisions and focus on base hits. Probably not a year we can hit a home run or a grand slam. That was last year. How do we focus on getting good, solid hits and making good decisions to grow our business for years to come?
Well, again, aei.ag is where you can find out more online with that. David Widmar with Agricultural Economic Insights. Appreciate the time. Thank you for joining us here today, sir. I know we'll talk to you again real soon. Have a great one.
Thanks, Jesse.
David Widmar with AEI joining us today here on Market Talk. That's going to do it for our Monday, February 14th edition of the show. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.